The end of the 4-year crypto cycle is approaching. More and more influencers claim it no longer matters. But do their arguments hold up? Let's dig into the data. One of the more well-known influencers calling for the end of the 4-year cycle is Virtual Bacon. His first argument is that the 4-year cycle isn't just about time, it's also about price. I'd argue that's simply not true. It's called the 4-year cycle, not the 10x cycle, for a reason. He claims that in previous cycles, Bitcoin reached the red zone in his chart before topping, so it should happen this time as well, and that it has to end in a blow-off top. And the evidence for that is basically none. The reasoning is, it happened before, so it will again. You can refit those red regression lines after the cycle ends. It's not magic. It's based on previous data, and it can be wrong. Nobody knows the exact top for Bitcoin. His second point is to use market structure change to exit. He shows the 2022 example, but by the time that was confirmed, Bitcoin was already down more than 50%, and alts were down over 70%. Then he pulls up 2017 chart, showing an example of selling BTC after it was already down 66%. At that point, I'm honestly not sure if he's being serious or trolling. He continues with the idea that even if the 4-year cycle is still relevant, it doesn't matter right now because Bitcoin has to hit 200K. He said, "That's what the Bitcoin 4-year cycle says." I honestly have no idea where that's coming from. My interpretation is simple. 4-year cycles are about time, not price. And historically, the returns have been diminishing each cycle, which is natural. The bigger the asset, the harder it is to push the price up. Next, he moves to altcoin seasons. Here is where it gets even more confusing. He claims Bitcoin dominance convincingly broke down in April 2021 and that Altseason lasted 8 months. In reality, the big run-up ended just 1 month later in May. After that came the correction and alts got demolished. Yes, in the second leg up, many altcoins recovered and even made new highs, but not all. Take Chainlink, one of the most popular coins of 2021. It made a lower high in that second run. Buying in mid-April would have led to a loss in USD terms and an even worse performance against Bitcoin. He frames it like there's plenty of time to position, but the data says the opposite. In both 2017 and 2021, Bitcoin dominance breakdowns were sharp and quick. And he treats an alt season as a guarantee. He only sees 2 possibilities, a blow-off top this year or an extended cycle. That's a dangerous mindset in any market. What if the cycle ends without either? No extreme alt season, no blow-off top. In a month's time, we could easily be below 50% dominance, and if the cycle ended there, it would still fit the structure of a perfectly normal cycle. Some coins would have taken out their highs, some wouldn't, but almost everything would have made a meaningful run. The timing, the numbers on Bitcoin, ETH, and alts would still make sense historically. This isn't a prediction, just an example that the cycle can play out in multiple ways, and in hindsight, none of them would seem unusual. As his final point, Virtual Bacon brings up M2 money supply, which has been repeated by many people this cycle. In 2022, M2 topped in April far too late to be a useful exit signal. On top of that, the confirmation of that top would only come much later, making it a disaster to rely on for timing. This cycle, with an 80 to 100-day lag, the chart currently looks supportive of the trend, but that can change at any time. It's fine to watch it as part of a broader confluence, but building your strategy around it would be a mistake. Interestingly, even though I think Virtual Bacon's arguments are made out of thin air, there are legitimate reasons to consider the possibility of 4-year cycles coming to an end. And in my view, these reasons carry much more weight. The most obvious and strongest argument is that Bitcoin spot ETFs are now the main source of buying power in this cycle. The market is no longer just retail-driven speculation, it's large-scale institutional inflows that can be tracked daily. Looking at the Bitcoin ETF flow data, the relationship is clear. When money flows into ETFs, the price rises. When those inflows slow down or turn negative, Bitcoin's price drops. This is a fundamental shift compared to previous cycles. Before ETFs, crypto existed largely outside traditional markets. Now it's directly tied in. with hundreds of millions, and at times over $1 billion, flowing in per day. Consistent demand of that scale could easily extend the cycle beyond the familiar 4-year timing. Will money from traditional markets respect the 4-year cycle, or will it simply follow the traditional markets? We don't know yet. What we do know is that institutions now have the buying power to keep Bitcoin moving higher. As long as the broader stock market stays risk-on, it makes sense they'll hold their Bitcoin positions rather than dump them. There's also the possibility that a US recession lines up with the typical 4-year cycle timing. Rates have been elevated for a long time, and labor market is softening. If rate cuts come too late, traditional markets could collapse and crypto would suffer with them. But if cuts arrive on time, they could push markets further into risk-on mode, which is exactly the kind of environment where altcoins perform best. So the outcome is binary. Late cuts mean pain. Timely cuts mean extended risk appetite. And if we do get that risk-on extension, then even Virtual Bacon's thesis about a blow-off top starts to look more realistic. But that's only one scenario. We don't know which one will actually play out. So what could cause a blow-off top? Recently, we've seen speculation about pension plans being allowed to buy Bitcoin, and there's still the pending US government proposal to purchase 1 million Bitcoin. But for now, that's just speculation. Besides ETFs, what's actually driving Bitcoin's price higher at the moment are treasury companies taking on debt to buy more Bitcoin. MicroStrategy started the trend, and more companies are joining as they see the opportunity. This model only works while the price is climbing. If, for example, news of a US government purchase were confirmed and Bitcoin started moving sharply higher, these companies would likely take on even larger loans to buy more. That kind of reflexive buying could absolutely fuel a blow-off top. It's a possibility, but it's not guaranteed. Now let's flip to the other side, what supports the idea that the 4-year cycle could still play out like it always has. At this point, everyone knows the 4-year cycle theory, and that knowledge itself has consequences. If we look at long-term holder supply, the pattern is clear. Long-term holders sell as price increases. In the 2017 and 2021 cycles, they started offloading about a year before the top. This cycle is already different. Because of the ETFs, Bitcoin broke all-time highs before the halving, and those long-term addresses started selling at the beginning of 2024. And as we now know, the market didn't top in January 2025, so that early selling trend was invalidated. But one thing hasn't changed. If Bitcoin continues pushing higher, the wallets that accumulated cheap coins at the lows will start selling into strength again. That selling pressure has always been a defining feature of previous cycle tops. Let's talk about the demand side. If everyone believes the potential top of the market is in Q4 2025, then what's the incentive to buy here? Bitcoin already did an 8x this cycle. At today's price, it's far from cheap compared to just a few years ago. Without fresh news or a strong new narrative to distract people from cycle timing, we run the risk of simply running out of buyers. And the more Bitcoin feels expensive this late in the cycle, the higher the odds we finally see an Altseason. I still think Virtual Bacon is wrong in assuming an Altseason is guaranteed, but the closer we get to a potential top, the more likely it becomes. It's basic psychology. When retail investors decide Bitcoin is too expensive and they missed the big move, they rotate into something else. And right now, ETH has already been rallying for months after being crushed most of the cycle. What happens once ETH finally breaks all-time highs, 6K, 7K, or beyond? Investors will immediately start searching for the next undervalued play, as long as the market environment stays risk-on. But keep in mind, towards the end of the cycle, rallies don't just get bigger, they get faster. And while Virtual Bacon isn't the only one saying we're still early, most of the big influencers are guilty of the same. It's what people want to hear. They want comfort. But the reality is simple. Nobody knows the future, and an extremely long, drawn-out Altseason is unlikely. The data shows that when Altseasons hit, they're sharp and quick. Sure, some coins will go crazy and do 10x, 20x, smaller ones even more. But on average, the altcoin market will likely return 3x to 5x if we actually get a proper Altseason, and that move probably lasts just 2 to 5 months at most. The timing of the current cycle is still intact. If we line it up with previous cycles, there isn't much time left, but there's still enough room for one last strong Bitcoin run and a rapid altcoin rally. And if that happens within this window, the cycle plays out exactly as it always has. Even if we top a couple months later than expected, I'd still argue that doesn't break the 4-year cycle theory. The very first cycle topped earlier than the next two, so a slight delay here wouldn't be a meaningful deviation. So if nobody really knows how this ends, the question becomes, how do you prepare? My approach is simple. I position myself to benefit from the most probable outcomes while making sure I'm not destroyed if something unexpected happens. For me, that means holding positions outside of crypto that won't be affected by market volatility, in my case, real estate. Inside crypto, I keep a long-term Bitcoin position that I won't touch. If a supercycle happens, I'll benefit from it. At the same time, I also maintain a speculative bag of altcoins that I fully intend to unload during the next major move up. That's all for today. See you in the next one, and remember, numbers don't lie.